Just give us key takeaways here.
The big problem, I guess, with China's local government finances is that they don't have the power to tax, but they are being forced to spend a lot. And obviously, through the pandemic, they've been being told by the central governments to give tax breaks to companies, to add more debt, to sell more bonds, and then use that money for infrastructure investment. But the central government does all the taxing. And so they have this real mismatch between how much money they have coming in and how much money they have going out, or they're meant to be going out. So their fiscal position has just been worsening throughout the pandemic. I mean, it was not great before that because of the trade war, but it's worsened over the last couple of years. And that is really making their position a lot harder. And then coming next year, or starting next year, they have this increasingly large wall of debt that's maturing, which they'll also need to roll over or somehow refinance. So, the local governments in China have these massive expenses right now, partly to maintain the COVID zero policy. But then they also have this, this incredibly large amount of debt that's maturing next year, which they also need to sort out. Plus, they need to be spending next year as well to support economic growth. So they're in a real fiscal bind at the moment.